Okay, let's try and unpack this because this past week in the markets, April 7th through 11th, 2025. Wow. It felt like trying to stand on a trampoline during an earthquake.
Yeah, that's a pretty good way to put it. Up, down, sideways. It was definitely a wild ride.
Exactly. And if you're listening, you're probably like us, just looking for the essential takeaways, the Cliff Notes version, maybe, without getting totally lost in the noise.
Well, that's exactly what we're aiming for here. We've both looked at the weekly market report from Market Deep Dive, and our mission really is to distill that whirlwind week.
Right. The U.S. stock market.
Yeah, break it down to its core, help folks understand what really mattered, what drove those pretty dramatic shifts, and maybe what it signals without needing a finance degree.
Good. So the big picture is volatility. Plain and simple. The report nailed it, calling it a roller coaster for the Dow, the S&P 500, and the Nasdaq. And all seem to hinge on, well, the latest news, sometimes even just rumors about tariffs, right? Mixed in with some interesting economic data.
That's right. But here's the surprising part. Maybe. Despite all that drama, all three major indexes actually finished the week with pretty significant gains.
Yeah, they bounced back in a big way from the previous week's losses.
Which is fascinating because even though the market recovered like that, the underlying uncertainty didn't just, vanish.
You mean like the VIX?
Exactly. The VIX, the market's fear gauge, it did decrease by the end of the week, but it stayed, well, elevated, higher than you'd normally see in calmer times.
So that suggests investors are still kind of bracing for more swings.
Yeah, I think so. It suggests that while maybe the immediate panic eased off, there's still an expectation for more significant price moves potentially coming soon.
Okay, so let's get into the need-to-know details of this roller coaster, starting with the Dow.
Sure. So the Dow Jones Industrial Average closed the week up a solid 5.0%.
Which sounds great on the surface.
It does, but getting there involves some serious twists. Monday, it dropped almost a full percent. That's about 350 points.
And that was mostly tariff uncertainty, wasn't it?
Seems like it, yeah. Concerns swirling around potential tariff delays. Then Wednesday happened.
Oh, Wednesday. That was something else.
Remarkable day. The Dow surged nearly 8%. That's almost 3,000 points.
Wow. And the trigger was?
The report highlights it came right after President Trump announced that 90-day pause on some tariffs, including those reciprocal ones.
It just shows how sensitive the market is to these, top-level policy announcements.
Absolutely. But you'd think, okay, big rally, clear skies ahead.
Nope. Thursday came along and brought a pretty sharp reversal.
It did. The Dow shed over 1,000 points. That's a 2.5% drop.
And this was right after they confirmed that big cumulative tariff on China. The 145% one.
Exactly. The 125% new plus the 20% existing. It just underscores the market constantly reassessing things.
1 minute hope, the next minute, reality check.
Sort of. The pause on Wednesday offered that glimmer of hope, maybe de-escalation, but confirming those big tariffs brought trade tensions right back into focus.
The market's constantly trying to guess the next move.
Pretty much. And then, to cap it all off, Friday saw another rally. The Dow gained 3%.
On hopes for more pauses, I guess.
Yeah, renewed hopes for maybe further pauses. So like you said, a true roller coaster. And the net effect was basically erasing the prior week's big losses.
Okay, moving over to the S&P 500. Similar pattern, but maybe even more dramatic.
Yeah, a bit more oomph, you could say. It finished the week up 5.7%. That was actually its best week since way back in October 2023.
Wow.
But just like the Dow, started with a dip Monday, down 0.2%, then that incredible 9.5% surge on Wednesday.
9.5% in one day, that's huge.
It was its strongest single day since, get this, October 2008, during the financial crisis.
Seriously, and that wiped out a ton of previous losses, right?
The report mentioned $5 trillion in prior losses erased, just emphasizes the power of those tariff headlines.
But again, the other shoe dropped on Thursday.
Mirrored the Dow. A significant downturn, 3.46% drop for the S&P. Then it also recovered over 2% on Friday.
But even with that strong week, it's still down from its peak.
That's the key thing to remember. While it recovered from that recent slide, it's still almost 9% below its peak from December 2024. So a good rebound, but not fully back yet.
Gotcha. And then there's the Nasdaq, tech stocks. Always a bumpy ride, it seems.
Especially with global trade involved, yeah. Nasdaq finished the week up 7.3%, and that Wednesday jump,
even bigger,
a whopping 12.2%. That was actually enough to pull it out of bear market territory.
The 20% drop definition.
Right, and that 12.2% was its best single day since January 2001.
Wow, going way back. So exiting bear market territory, that's got to be Psychologically important.
It can be, yeah. Suggests a potential shift in momentum, at least short term. But again, same pattern.
Gain Monday, huge leap Wednesday.
Then a 4.31% loss Thursday, and another rally over 2% on Friday.
And still down from its highs, too, I assume.
Yep. Even with that impressive week, the Nasdaq is still down over 12% from its December 2024 high. So recovery underway, but still ground to make up.
Okay, so we've seen the wild ups and downs. What were the real engines behind all this volatility? The report points to a few key things, and I'm guessing tariffs are top of the list.
Not surprisingly, yes. Tariff policy whiplash. If you just look at the timeline, it tells the story.
Monday's wobble on rumors.
Exactly. Unconfirmed reports caused that uncertainty. Then the official 90-day pause announcement Wednesday just ignited that massive rally.
And the confirmation Thursday slammed the brakes.
Immediately sent the market into reverse. It's a very direct cause and effect. And even Friday's gains were tied to hopes for more pauses.
So this issue is still the main driver.
It really seems to be shaping market sentiment day to day. It starkly shows how policy uncertainty can sometimes just override the economic fundamentals in the short term. Creates opportunities, but also big risks.
Definitely highlights the impact of those high-level decisions. But it wasn't only tariffs, was it? We had some economic data releases, too.
That's right. They played a role. Wednesday's ADP employment report came in better than expected.
More private sector jobs added. That's usually good news.
Yeah, 155,000 jobs added in March, beating estimates. Often seen as a sign of a healthy economy, contributed to the positive mode early on.
But then Friday threw a curveball.
A bit, yeah. The University of Michigan Consumer Sentiment Index fell. Quite a bit, actually. Lowest level in over 2.5 years.
Ouch. And inflation expectations went up.
They did. Rose to 5%. That definitely raised some red flags about potential stagflation.
Right. Stagflation, slow growth, rising prices, not a good combo.
Not ideal. So it likely took some shine off the earlier gains. You have this divergence, strong jobs, but weakening consumer sentiment. Paints a more complex picture.
Good point. So jobs look okay. Consumers are getting nervous. Prices might rise. Mixed bag indeed. And then there's the Fed. Where do they fit in?
Well, the Federal Reserve had decided back in March to hold rates steady at that 4.25% to 4.50% range.
Okay.
But with that stronger than expected job data we just mentioned, expectations for when the Fed might actually start cutting rates got pushed back, probably to June, maybe later.
And higher rates aren't great for growth stocks, like tech.
Generally, no. Makes borrowing more expensive, can slow down investment and growth. And then you had the upcoming CPI report.
Right. The inflation number for March due out this Thursday.
Yeah, expected to show a slight decrease in annual inflation, down to maybe 2.6%. But those tariff fears were lurking. Could tariffs push prices up?
Adding another layer of uncertainty for the Fed and the market.
Exactly. Creates anxiety.
And we can't forget the global picture. China had already announced retaliatory tariffs before this week started.
Critical piece of the puzzle. The global trade environment matters. While Friday's rally suggested maybe the market hoped the 90-day pause meant real negotiations could happen.
But the threat of retaliation is still there.
Oh, yeah. From China. Maybe the EU, too. That was a concern, likely why European market gains were more modest on Friday.
And emerging markets. Places like Mexico, Canada.
They saw some inflows after the pause, which is good, but their currencies saw some volatility, too. They're very sensitive to U.S. trade policy shifts, given the strong links.
Okay, so a really complex interplay. Tariff news, mixed economic signals, Fed expectations, global reactions, all stirring the pot. Now, the report also dives into how different sectors reacted. That's always interesting.
It is. It reflects how the market tries to process all this. Technology, for example. Big rebound overall, thanks to Wednesday.
But then got hit hard Thursday.
Right. That 4% drop Thursday really showed its vulnerability to the China tariffs, especially semiconductors.
Yeah, you mentioned them. They were up initially Monday, but ended flat.
Yeah, initially up 3.5%, ended flat. Makes sense, right? Potential supply chain issues, uncertainty about demand from China for those chips?
Definitely. What about consumer discretionary? Stuff people buy when they have extra cash.
They gained about 5% for the week, recovering losses. But it was uneven. Retailers like Dollar General saw a boost midweek, maybe hoping the pause would ease price pressures.
But not cars.
Autos lagged. Not surprising, given tariffs can directly hit the cost of parts and finished vehicles.
Makes sense. And industrials. The backbone companies.
They rose about 4%, helped by Wednesday's rally, but those trade disruption fears kind of limited the gains. Transports, especially, underperformed.
Worries about less stuff being shipped around.
Likely, yeah. Concerns about shipping volumes if global trade slows down again.
So the sectors most tied to global trade felt the most heat and had maybe the most limited gains overall. What about financials? Banks.
Financials did pretty well, climbed 5%. The good job data probably helped a stronger economy, is generally good for banks. And the tariff pause optimism likely played a role too.
Put some caution there, too.
Yeah, a bit. Banks were heading into earnings season, starting Friday actually, and there was uncertainty about how tariffs might be impacting their business clients.
Okay. And then the defensive plays. Consumer staples, utilities.
They lagged, both up only about 2%. When the market rallied strongly Wednesday, investors shifted some money out of these safer bets.
Into the cyclicals that might benefit more from a recovery.
Exactly. Though staples held up okay, maybe reflecting those consumer sentiment and concerns we talked about, people still need groceries.
True. And small caps. The Russell 2000.
They surged 1.8% for the week, but that actually underperformed the large caps like the S&P 500.
Why is that? More domestic focus. Shouldn't they be less affected by tariffs?
You'd think, but the report suggests the market still sees them facing headwinds from potential tariff costs filtering through the economy and maybe worries about a slowing domestic picture.
Interesting. It's fascinating how these sector trends show up in specific stocks, too. The report mentions Nvidia.
Yeah, Nvidia is a perfect example of the week's volatility and that China tariff focus. Surged Monday and Wednesday.
Then dropped hard Thursday.
Nearly 6% Thursday. Explicitly on worries about how tariffs could hit demand for their AI chips in China. It ended the week up 4%, but that swing really shows the sensitivity.
And Tesla. Sounds like they had a rougher week overall.
They did, dropped 7.3% Thursday. Seemed like a mix of factors, worries about tariff costs on their cars, but also some analysts cutting price targets, citing brand issues perhaps related to Elon Musk.
Oof. So even with a Friday rebound, it ended down.
Down 3% for the week, yeah. And it's had a really tough year so far, down over 35%. Suggests some ongoing challenges there.
What about Apple? Another big one with China exposure.
Felt the pressure too, especially Thursday, lost 4.2% that day. The report noted that contributed to like a $775 billion market cap wipeout since tariffs really ramped up.
Wow, that's huge. Heavy reliance on China for manufacturing makes them vulnerable.
Very much so. But it did gain Friday on the tariff pause relief, ending the week up 5%. Shows how much these policies matter to even the giants.
But it wasn't all negative for individual stocks. Broadcom stood out.
Absolutely. AVGO jumped 8.6% Friday after really strong earnings, driven by AI demand, ended the week up 10%.
So good company performance can still shine through.
Definitely. It shows strong fundamentals can still matter, even in a crazy market. And it helped it lift the whole semiconductor group a bit at the end of the week.
Okay, so it wasn't just stocks moving. Bonds, commodities. What happened there?
Well, the bond market saw more demand, acting as a safe haven, especially early in the week with the uncertainty.
So yields went down.
Yep. More demand pushes prices up, yields down. The 10-year Treasury yield dropped from 4.31% Monday down to 4.25% Friday. That's down 6 basis points.
Not a huge drop.
No, because there was this counter pressure. Fears that tariffs could eventually lead to higher inflation seem to limit how much yields could fall. A bit of a tug of war.
Got it. And commodities. Gold must have done well.
Classic safe haven move. Gold rose 4.7% to $3,177.50 an ounce. Best week since November 2024.
Hit a record high too, right?
Hit a record Thursday, yeah. Gained 3.2% just that day. Investors flocking to it as a hedge against all the volatility.
And oil? Different story.
Slight dip. WTI crude fell about 0.5% to $68.50 a barrel. Seems like trade war fears and demand uncertainty outweighed other factors like Canadian imports.
Interesting contrast. Gold soaring, oil slipping. Maybe shows that cautious undertone despite the stock rally. What about globally? Europe, Asia?
They were definitely watching the U.S. closely. European markets rose nicely Wednesday on the tariff pause news, recovering some losses from the prior week.
But then cooled off Friday.
Gains were more modest Friday, yeah. Likely fears about how the EU might respond to the ongoing U.S. trade situation.
And Asia.
Japan's Nikkei and Hong Kong's Hang Seng gained midweek too. But China lagged. Understandable, given they're right in the crosshairs of the U.S. tariffs.
Tempered the overall mood in Asia then.
A bit, yeah. And emerging markets, as we mentioned, saw some inflows post-pause, but currency volatility remained, especially for Mexico and Canada.
Okay, so global ripples everywhere. Now looking ahead, this current week, April 14th to 18th, what are the key things to watch, according to the report?
A few really critical areas. First, obviously, tariff negotiations. or lack thereof.
The 90-day pause clock is ticking.
Exactly. And President Trump mentioned that April 9th deadline for reciprocal tariffs before the pause. So any news on progress, extensions, or heaven forbid, escalations?
Will move the market big time.
Almost certainly seems to be the #1 driver right now.
What else? Economic data.
Thursday's CPI report, the inflation number for March, expected at 2.6% annual if it comes in higher.
Could spook the market about the Fed again.
Could definitely reignite those concerns about rate cuts being delayed, maybe put pressure on stocks.
And earnings season is kicking off properly now.
Yeah, we got the banks starting Friday. More this week, including crucial tech reports later on.
Testing the impact of tariffs and everything else.
Exactly. How are companies actually doing? What's their outlook? That will be key, especially for Nasdaq momentum with all the tech earnings.
And finally, watching how other countries react during this pause.
Absolutely. Actions or statements from China, the EU, other trade partners, they could either help stabilize things or add new uncertainty.
Okay, so wrapping this up, this past week was quite the reminder of how sensitive markets are to policy shifts, especially trade policy.
Stark reminder, yeah. Dramatic swings driven by tariff news set against that mixed economic backdrop.
And while the indexes bounced back by Friday, that recovery feels fragile, given the unresolved trade issues.
That sums it up well. Fragile optimism, maybe?
Yeah.
The volatility really highlights the challenge for investors right now.
Seems like these swings could continue without clear resolutions.
It seems likely. Which brings up a big question for everyone listening, In a market so influenced by policy, how do you balance risk and opportunity?
How do you make informed decisions with all this noise?
Exactly. And thinking ahead through this 90-day pause, what are you going to be watching most closely? What signals will matter most to you? Something to mull over.